Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hours show. Just came across the wire that Beyond Meat and KFC will launch Beyond Meat's meatless chicken on its menu starting Monday, and that's according to a CNBC report. So that's Beyond Meat. Maybe we'll get some movement in that stock. It's been in a downtrend now for quite some time. Going back to the end of June, the beginning of July, that was the last time they were at a peak in this downtrend that they've been on. Their last earnings, they really suffered and gapped down. So that's Beyond Meat. KFC is going to introduce Beyond Meat's meatless chicken on their menu starting Monday. So that's interesting news. So for the market today, how did you do in the market today? I'm curious to know. It was the last day of the Santa Claus rally. Typically, the last 2 days are included in that Santa Claus rally. And it ended on a mixed note today. The Dow got a record high. The S&P was at record high territory intraday, but then closed the day down. And here's the S&P 500 today. We've got this red candle forming. See that candle wick? It went up to a new intraday all-time high, but it did close below that high. So it wasn't a record yet for the year. Yesterday was a close at record high. So that was pretty cool. All right. Now, in today's live show, I got a couple stocks that I want to talk about. I want to talk about John Deere. Just real briefly, they introduced a new 8R series tractor, which is totally autonomous. That is very interesting for John Deere. Also want to talk about Ford. They came out and their stock did really well today, but they had an announcement about their electric F-150 Lightning pickup truck. And then I want to talk about Pinterest. Some people may see that maybe Pinterest may be a value play at this moment in time. I'm not so sure about that. So we're going to dive a little deeper on Pinterest, on Ford, and just scratch the surface on the new news about John Deere. All right. And then, of course, I'll give you my brief synopsis of the market today. So just remember, though, the most important thing about this live show, this is our 61st episode. It's you. What's on your mind? If you have a question, leave your ticker symbol and your question in the comments. We'll go over it live during the show. That's what we are here for. It doesn't matter what I want to talk about. All that matters is that I'm answering your questions. So while you fire up those questions, let's talk about the market today. Now, as I said, the markets, they wavered today. The Dow Jones, it reached its record high. But one quick note before we get into the market recap. We sent out our top 10 list to Patreon members, and that included our top 10 growth stocks, our top 10 dividend stocks, although we don't like to call them dividend stocks because we're looking for more than just what are the biggest paying dividend companies out there. That's part of the equation, but not the whole story. And the way we determine the dividend stocks, we call them yield leaders. Now, maybe in another episode, we'll go over what our equation looks like for yield leaders or dividend stocks. But we also did our top 10 momentum stocks. And if you would like instant access to these lists, it's 30 plus stocks that you can choose from. Click the second link in the description for instant access. And you get our top 30 plus. We threw in a few bonus stocks as well to kick off the new year so we can all reach our goal of financial freedom. That's what this is all about. Now, I do want to give you an example of how we get to our top 10 momentum stocks. Now, this list is updated every single week. So every week as a Patreon member, you get our top 10 momentum stocks. Now, our momentum stock list is a proprietary list of the top 10 most liquid, high relative strength stocks in the market that are ideal for day trading or swing trading. High quality names. It is generated through a proprietary algorithm that places heavy emphasis on superior relative strength, high average true range or ATR values, and highly average daily volume, among a few other data points. An updated list is published every single week for our Patreon members. So now's your chance to kick off 2022 with a solid list of stock picks. We've done the research, so you don't have to. Again, it's in the second, or I should say, it's the first link in the description. The second link takes you to Webull to get your multiple free stocks. They are back now to a 2 free stock offer. But the first link in the description will take you to our Patreon page. There is a tier for everyone. All right, stocks traded mixed today. The Dow Jones added more than 200 points and extended the record rally boosted by financial stock gains amid expectations of higher yields. While investors kept betting on stocks that would benefit from a robust economic recovery despite the rise in COVID cases and the fresh lockdowns, value and cyclical stocks outperformed at the expense of growth stocks. Meanwhile, and let me back up one quick second. So, value and cyclical stocks outperformed at the expense of growth stocks. Now, we give you our top 10 growth stocks as Patreon members and our top 10 momentum plays. Now, if growth stocks are being beaten up, wouldn't it be a great value to have a curated list of the top performing, the most high relative strength as options for you to invest in? That's what we give our Patreon members. All right, the Russell 2000, it declined 0.2%. And the S&P 500, well, it swung between gains and losses to finish a little changed around a higher record. On the other hand, the tech-heavy NASDAQ dropped 1.2% as tech losses dragged down the index amid a spike in bond yields. On the corporate front, Ford. Yesterday, it was Tesla surging 13.5%. Today, it was Ford's turn. They surged almost 12% after the company said it will start accepting purchase orders this week for the all-electric F-150 Lightning pickup truck. More on Ford in just a moment. GE jumped more than 7% after it was upgraded to outperform from neutral. And on the other hand, Tesla fell 4.1% after increasing 13.5% yesterday, while Nvidia also gave up 3% of its yesterday gains. More specifically, the S&P 500 energy up 3.5%, financials up 2.6%, and industrials up 2%, with materials up 1.3%. Those sectors, they all rose between 1 and 4%. Now, if we look at energy up 3.5%, energy did outstanding last year. I believe energy will continue to outperform in 2022. Now, that's a pretty good bet. Okay, the information technology sector down 1.1%, healthcare down 1.4%, and consumer discretionary down 0.7%. Those sectors struggled amid weakness in growth stocks. The Vanguard Mega Cap Growth ETF, ticker symbol MGK, it fell 1.2%. The iShares Biotechnology ETF, IBB, fell 2.7%. And Kathy Wood and ARK Invest. The ARK Innovation ETF, ticker symbol ARKK, fell 4.4%. So the struggle with ARK Invest continues. Growth stocks eventually paired some of the losses in the afternoon, helping the market end the Santa Claus rally period on a better note. Yes, the Santa Claus rally time frame does include the first 2 trading days of the new year. So that's a recap of the market. How did you do in today's market? Let's look over at crypto. Let's start with Bitcoin, BTC USD on TradingView, and there is a link in the description for a free account. Now, we've been looking in this yellow shaded box for quite some time now, and Bitcoin just seems to be staying within this box. It's right now sitting at 46,107.53. It got as low today as 46,103. Now we just hit a new low for today, 46,101.51. So we just saw right now, again, a new low for the day. So it is getting down to the very bottom of this candle here. Now, this box, it gets down to 45,500. 45,500. That has been an area that has kept this box intact as Bitcoin is moving sideways. If it can remain above this, that's what I'm looking for. 45,500. If it can stay above that, that's good news for a continuation pattern. It's obviously been in a downtrend, except for the couple of days here, December 23rd through December 27th, where it broke above 50,000, but only stayed up there for the holiday weekend and then came back down. So we're watching this box. I extended it out a little more yesterday. I'll take it out a little more today. But we've been in here since December the 8th for nearly a month now in this yellow shaded box. That's interesting. Now, if we look at the RSI, it's down to 40 right now. 40.4 is where it sits. And now we've broke 46. Now we're at 45,980. So it's going lower. I'm going to be interesting to watch this. At the end of the show, we'll come back around to Bitcoin. 45,500. Can it stay above that mark? And as a matter of fact, I'm going to write that down right here. 45,500 for BTC. Okay. We'll come back around to that one. Back up to 46,000 now. All right, let's look at Ethereum. ETH/USD on TradingView. And I use Coinbase for the data. Now, look at this chart pattern here for Ethereum. Ethereum is actually up 1.1% today. It's at 38.11 right now. Ethereum has been trending up for the past few days. It is running into resistance on this ascending trend line right here. Now, this ascending trend line, if we zoom out and look at this, Ethereum is still up pretty high on its trend line. We still have, my goodness, the 200-day moving average is what we were talking about yesterday as a worst case scenario, and that's at 33.94 today, which is right here at the next trend line underneath of the current one it is struggling to get above. Now, could Ethereum be building up momentum to break out once its update is concluded in the first half of 22? That's a good possibility. and one that we'll talk about in a little more detail as we get closer to when it could potentially be updated. Right now, Ethereum for the year is up 3.5%. That's not too bad. Remember, Ethereum was up 400% last year. So I would be willing to say that Ethereum should continue to have a great 2022. And I would be, and I currently am, stacking on as much as I can in Ethereum right now. All right, let's talk about something kind of interesting, and just for a brief moment, and that's John Deere. They manufacture tractors. They have the iconic green and yellow. Ticker symbol is DE for John Deere, or Deere and Company. What a big move today. Up 6% today. Look at this. And to get some perspective, let's look over the past year and a half or so. Now, Deere had an incredible rally out of the March 2020 lows, but last year it moved sideways. It was range bound for the majority of the year, with a low around $335 and a high of around $366. Well, it broke that range today with this massive move. Now, while I talk about this, I'm going to pull this picture up here. This is that new tractor from John Deere. It's called an 8R. Now, during a press conference today at CES 2022, John Deere revealed a fully autonomous tractor that's ready for large-scale production. So this isn't just some prototype. This tractor is ready for manufacturing. This is something that can be a true revolutionary item for the farming industry. Now, the machine combines John Deere's 8R tractor, TrueSet enabled chisel plow, GPS guidance system, and new advanced technologies. The autonomous tractor will be able to be delivered to farmers later this year. Can you imagine a world where tractors are parked in their shed? As the sun rises, the tractors start moving out with their equipment, head out to the field, and a farmer is sitting at a computer desk, has monitors around, looking at different camera feeds coming from the different autonomous tractors, these self-driving tractors out in the field. That's amazing. Imagine the amount of time that frees up for the farmer. It's incredible. And with farming and a lot of it being GPS reliable, with these big open fields, you don't have to worry about people getting injured. If something goes wrong, the tractor can come back into the shop to be fixed. I think this is a big deal. Now, me personally, I'm a little biased towards it. I grew up on a farm, and I love farming. I think it's wonderful. Now, this for John Deere, this is what accelerated a 6% move today. And looking at these candles over the past year, you don't see 6% moves very often for John Deere. This is like Tesla doing 20% in a day. because John Deere usually moves 1% to 2% at a time, or even less than 1% on most days. So this is a really, really big deal for the farming industry and for John Deere in particular. And I've been a fan of John Deere. If you go back probably over a year, or maybe about a year, you'll find a video that I did on John Deere. Now, don't laugh when you watch the video. It was one of the early videos that I made, so it's going to look a little bit different. But I did a video on John Deere a while back, and I believe in the autonomous driving technology that John Deere has. And I think this is going to be huge for the industry. This is a new tractor that farmers are going to want to buy because it's going to save them so much time and money in the long haul. Farmers will be able to spend their time doing other things besides sitting on a tractor all day in a field. This is big. This is big. All right, let's move off of John Deere and let's talk about Ford. Ticker symbol is the letter F for Ford Motor Company. Now, they had their time to shine today, like Tesla did yesterday. Look at this, 11.6% for Ford. Volume, look at this volume on today's move, 310 million. And the average volume is at 92 million. 310 million trades today for Ford. Now, Ford has been in an incredible rally since the end of September. It had a beautiful October rally, late September. Let's see, when did it start here? September 20th. And then it ran up to November the 9th. So just over a month, it had a great rally. And then it's been moving sideways, building up momentum. Now, the news today for Ford is ambitious, to say the least. So for Ford Motor Company, ticker symbol F, on the heels of Tesla's, ticker symbol TSLA, on Tesla's impressive, and I truly mean impressive, Q4 delivery report, Ford Motors revealed that it's also experiencing robust demand for its new electric vehicles, EVs, and is quickly becoming a major force in the EV space. Now, when I talk about Ford, I want you to understand a couple of things. I am not discrediting Tesla at all. I think Tesla is the leader in EVs, but we have to have second, third place, fourth place in the EV industry. And Ford says that they are fighting for second place. That gives you all you need to know about the electric vehicle race for the winner. It's Tesla, hands down, nobody can beat them. So just 3 months after Ford doubled its F-150 Lightning pickup truck production plan to 80,000 vehicles, the company announced today that it's doubling its production target again to 150,000 EVs per year, with about 200,000 reservations taken for the all-electric F-150 Lightning. Ford has paused taking new reservations and has turned its attention to fulfilling current demand. In addition to the successful launch of the Mustang Mach-E, which helped push Ford's EV sales higher by 154% in November, the building momentum for the F-150 Lightning has the company primed to seize the number 2 spot in the North American EV market. And who's got the number one spot? Well, that's Tesla. Like I said, this isn't a dig on Tesla, and it's okay to talk about who's coming in second place. Ultimately, Ford intends to become the leading EV maker in North America, but it has a tall order to climb. For some perspective, Tesla is on target to deliver, and I said this yesterday, around 1.5 million EVs in 2022 as it ramps up new factories in Austin, Texas, and Berlin, Germany. This year, in 2022, if all goes according to plan for Ford, its total EV production capacity will max out at about 400,000 vehicles in 2023 and will potentially increase to 600,000 in 2024. To reach that target would represent a significant accomplishment considering existing supply chain issues and the burst of demand that is coming for EV batteries, chips, and other parts and components. Yes, we have a supply chain issue right now. And we have chip shortages right now. But with the demand for electric vehicles, what kind of strain is that going to place on the manufacturing strategy? The supplies that electric vehicles are going to need are going to be needed in very high volumes. And I don't think one particular company or two will be able to provide the demand for electric vehicles. So if you're looking for an industry to get in to start a business, I know it's a little harder when you're in manufacturing to just up and start a business, but this would be one that is going to have decades of payoffs to come. Just an entrepreneur insight there. Now, rival General Motors, so Ford, will give Ford a run for its money in the race to the number 2 spot as GM is pouring $35 billion into its EV development plans over the next few years. By 2025, GM expects to launch over 30 different electric vehicles, and it forecasts that its annual EV revenue will soar from about $10 billion in 2023 to around $90 billion by 2030. Add in newcomer Rivian Automotive, ticker symbol RIVN. Add them to the mix with its estimated about 600,000 in annual production by 2024. And the stress on the EV supply chain, those figures are going to greatly intensify. If you're making anything in the EV product line, any component, any part for electric vehicles, start ramping up now. As a matter of fact, you probably should have already been started ramping up looking at the success of Tesla. At least that's what I would have done. I would have started ramping up, adding capacity, because they're going to need it. A key advantage for Ford, though, is that it is building 3 new battery plants that will continuously recycle EV batteries, thereby eliminating all battery imports, which rely on precious metals from foreign mines. And I said this yesterday too. Companies are looking to have their parts that they need manufactured in the USA so they do not have to rely upon foreign countries for what they need to build their products. It's important. And many companies are looking domestically for what they need. Customer enthusiasm for EVs in general is lifting many boats in the automaker industry. But Ford shared one statistic indicating that it's gaining big ground on the field. Specifically, the company stated that 75% of reservation holders for the F-150 Lightning are brand new to the Ford brand. Now, a key caveat is that a reservation does not equate to a final order, and that competition will continue to heat up, with GM set to officially introduce its all-electric Silverado pickup truck tomorrow at CES. However, the very high percentage of reservation holders new to Ford is still a compelling data point that bodes very well for the company. I don't think that you can argue against that point. Now, the main takeaway is that surging demand for the all-electric versions of Ford's most prolific models, mainly the F-150 Lightning, and a few for the Mustang Mach-E, has turbocharged its growth perspectives, positioning it to realize its ambitious vision of becoming the second largest EV maker. And today's 11.6% move shows investors are also backing Ford for second place. All right, let's hop off of Ford. Just looking here at the wire, there was something that came across. I saw Ambarella pop up because Ambarella, that's a company that we've talked about here before on the channel. Ambarella, AMBA, is their ticker symbol. If you go back maybe a month and a half, 2 months, probably closer, maybe September timeframe, there is a video on Ambarella. You can search Ticker Time News, Ambarella, AMBARELLA, and you can watch that video on Ambarella. I am very bullish on Ambarella, but Ambarella announced during CES the CV3 AI domain controller family. This fully scalable, power-efficient CV flow family of SoC, which is software on a chip, just like Nvidia. As a matter of fact, in my Nvidia video that I did last week, the week before, I did mention Ambarella because Nvidia, the big dog, it's the giant in the industry of software on a chip, SoCs. But if you're looking for a smaller company with more growth potential, Ambarella is a good choice. All right, so it provides high AI processing performance at up to 500 ETOPS, representing a 42 times increase over Ambarella's prior automotive family. See, one of the big players for Ambarella, and I didn't plan to talk about Ambarella in this video, but Ambarella has a very strong foothold in the automotive world. As a matter of fact, Ambarella is a manufacturer for Rivian and Rivian's cameras that they have on their vehicles. So yeah, there's some news coming out of CES about Ambarella that I find rather interesting. Now, a lot of growth companies, like we said at the very beginning, they got hurt today, which Ambarella is in that. They were down 5% today. But you can see they had this great run up from August through, I guess, what is this? November the 10th. They had a very nice rally. but they've been chopping around big time here over the past month and a half. I'd like to see them settle down a little bit. I'd really like to see them come back down under $200, but above $180. So that $20 swing there. I'd like to see them within that range so I can add more, of course. No, I've got a good position with Amberella. I like it. Waiting to see what happens next. And yeah, I like the company. Okay, it's sorry, that caught my eye. I got distracted there. I've got the comment section opened up here, and then right beside it, I've got the news service over here. So it's constantly moving as different announcements are made from different companies. All right, Amberella. There's a bonus for today's vehicle. Today's vehicle, my goodness. Thinking about Tesla and Ford. All right, let's talk about Pinterest. PINS, pins, is the ticker symbol for Pinterest, and you can see it, folks. I definitely don't have to tell you guys where it's at right now, but this area right here, I've had this line on, my gosh, since September of last year, and it's right between $33.08 and $33.55. I've had this on there because back here in July, August, September of 2020, Pinterest was using this area as support. It had a big run up from earnings back on July 30th, 2020. And it's just been using that $33 area as support for a couple of months after that, about 2.5 months after that, before another rally. And then it reached its peak back on February 17th, and it's been down ever since. You can see it in the movements of the stock here. This big channel that it opened up, that it would go up to, it would fall hard, it would rally. People were just hoping that there was something left, but every earnings showed that user MAUs were falling. And that leads us to where we are today. Now, it's sitting right here after hours, 33.08. So it is now on that bottom area of support that it held in 2020. Now, the reason I'm talking about Pinterest today, they were down 9% today, which isn't surprising. They've had big falls before. I mean, they were red yesterday when the market was rallying. Now, Pinterest, ticker symbol PINS, PINS, investors are quite uninterested in the stock after, I think it is pronounced Guttenham. They downgraded the stock to hold, citing lower user estimates. Now, that's something that we know, that user base is falling for Pinterest. A series of downgrades has occurred since the company narrowly beat on Q3 earnings amid a continued decline in monthly active users, or MAUs, monthly active users. Pinterest shares have lost over 25% of their value since that report and have been halved over the past year. Pinterest, as the provider of an online site where users discover new ideas, new trends, new things to do in their kitchen or backyard, it thrived during the pandemic, hitting a high of 478 million MAUs in Q1 of 21. But as mobility has improved and people have returned to more normal routines, MAU growth has dipped. As of Q3, MAUs totaled just 444 million, nearly flat from the year ago period, and a 7% decline from Q1. With the stock dropping 9% today, Pinterest now trades at around a 24 times 1-year earnings, a reasonable valuation, especially when looking at Pinterest as a potential takeover candidate. And that's the main reason for talking about Pinterest today. Who is going to buy Pinterest? And what is it going to take for a larger tech company to buy Pinterest? I think MAUs will play a big part. In early 2021, it was reported that Microsoft, ticker symbol MSFT, was thinking about the purchase of Pinterest for about $51 billion. Later that year, it was rumored that PayPal, the big deal, PayPal, PYPL, was looking to acquire Pinterest for roughly $400 billion. So Microsoft at $51 billion and PayPal possibly $40 billion. That's $11 billion swing in the difference. 51 billion, 40 billion. Pinterest right now has a market cap of 21 billion. So let's just say that somebody came in, Pinterest is valued at $20 billion, and somebody's going to pay $40 billion. That means they are paying a premium of double. So if you owned shares of Pinterest at, I don't know, if it goes down to 20 billion, I don't know what the share count is. Maybe the stock goes down to $30. It's just a guess, rough estimate. So don't hold me to that. Then your $30 would potentially then go to $60. So if you look at Pinterest through that lens, then it kind of looks attractive. Okay. Now, in late 2021, the payments processor came out and stated, talking about PayPal now, that it was not pursuing an acquisition of Pinterest, quote, at this time. Does that mean a time in the future? A time later when MAUs are growing? Hold that thought. I think that a takeover of Pinterest is still on the table, and that these tech giants may have only paused their pursuit of acquiring Pinterest pending improving user metrics. In the meantime, Pinterest has shown a few bright spots in other areas. For example, in Q3, even as MAUs were virtually flat year over year and fell 2% consecutively, revenue still grew 43% year over year and 3% quarter over quarter. Also, EPS consistently grew year over year throughout each quarter in fiscal year 21, most notably jumping by over 100% year over year in Q3. It is also worth noting that Pinterest is a site where users look to spend money. In contrast, other social media platforms such as Meta platforms, ticker symbol FB, Snapchat, SNAP, and Twitter, TWTR, are primarily used for social interactions. This key difference gives advertisers an increased incentive to spend money promoting products on Pinterest. Nevertheless, advertisers may steer clear of Pinterest if MAUs continue to decline. Even at a relatively attractive valuation of 24 times forward earnings, just 1 year earnings, the stock may continue to face intense selling pressure unless Pinterest can return to growing its user base. Therefore, I think it may be better to wait until Pinterest posts its next earnings report within the next 2 months before diving into the stock for the long term to see if users are actually returning to the site. And if they are, then watch out for the potential takeover of Pinterest. And that premium the company will pay to purchase Pinterest, that's your profit. All right. Those are the companies I wanted to dive deeper on today. Share your thoughts in the comments. Let me know what you think about John Deere and the autonomous tractor, what you think about Ford fighting to be second place in the EV landscape, and what do you think about Pinterest being bought out if monthly active users starts climbing again? All right, now we're on to the point. I want to talk about Catalyst Watch. I didn't do the video on Sunday, so I'm just going to break it down here. Just a couple things to look at tomorrow and something on Thursday. First up, tomorrow, Catalyst Watch, Wednesday, January 5th. Luminar Technologies, all right? Their ticker symbol is LAZR. Luminar Technologies. If we let's look at this. Now, when they came onto the market, they popped, went really high, but as they all do, they come back down. Now, this one is forming a symmetrical triangle. However, there are only 2 points connecting the top line and 2 points connecting the bottom support line. We need 3 or more to really confirm this pattern. Now, the reason I'm bringing Luminar Technologies up for Catalyst Watch tomorrow is they are holding a joint press conference at CES with Volvo Cars to discuss their vision of the future of automotive safety and autonomy. Shares of Luminar have rallied in the past after media appearances, and tomorrow should be a peak media appearance for Luminar. So keep them on your radar for a move tomorrow or maybe even into Thursday, based on what they say with Volvo. I would imagine there's some sort of collaboration there. Why else would the two be getting on stage to talk together in a joint press conference? All right. Now going to Thursday, January 6th. This is one we've talked about many times on the channel. It's been one requested many times on the channel, and that's Bed Bath & Beyond. Ticker symbol is 3 Bs, 1, 2, 3, and a Y. BBBY. Bed Bath and Beyond. Now, they were in a symmetrical triangle, but they broke down in theirs, and they've been in a downtrend since then. We are 2 days away from their earnings, and that's why I have them on Catalyst Watch for Thursday, because Bed Bath & Beyond post earnings. Now, options trading implies a move of over 20% after the numbers drop. If the numbers are positive, this thing could move 20% to the upside. If the numbers are negative, this thing could drop 20% to the downside. It's all about the numbers and guidance. I always say that. Okay, Bed Bath & Beyond has missed the revenue estimates in 3 out of the last 4 reports. And it's fallen short with EPS in 4 of the last 5 quarters. So I'm sorry to say that it's not looking very good on those odds. However, I think the reason the options market implies a 20% move is because we are coming off part of their sales for this quarter will include some holiday shopping. But of course, they're lapping last year's results with holiday shopping too. So, were more people shopping earlier? And if they were, that should bode well for Bed Bath & Beyond. But we're not going to know officially until the numbers drop. So we've got that one on there. Another one for Thursday is Walgreens Boots Alliance. Ticker symbol is WBA. All right, WBA. They have been on a sharp rally since December the 1st. And they were up another 0.9%. 7, actually, after hours, let's call it 1%. They were up 1% today. But if we go and look at them, over 2021, they have really been range bound. We could probably go in here and call it $45 support. And yes, of course, the most recent one has dipped below it. And then resistance probably sits here right around 51.50. I'll put a line there. You can see how it's been range bound here for the second half of 2021. And then for the first half of 2021, it was range bound, but at a little higher mark. You can see right here. The low was the current range high of 51.50, and then the high got up to around $56. So this thing, and then look at this, the very beginning of the year, January, it was range bound, where it's been range bound over the second half of the year. So Walgreens gets into these patterns where they are in this range. And the one cool thing I will say about being range bound is it makes for a pretty good trading setup. Because if you know that this thing typically bounces around $45, $46, then you can buy in there. And then you know that it typically starts reversing around $51, $52. You've got your entry and your exit points. So it's something to keep in mind. But I do want to measure this last rally, this December long rally to where it is now. 22.7% from December 1st until today. 22.7% rally. Now, this is why I'm bringing up Walgreens for Thursday. They are 2 days away from earnings. So Walgreens, they're going to report their fiscal first quarter results. Analysts are looking for an EPS of $1.32 and sales of $32.7 billion. There have been 10 upward EPS revisions in the last 3 months and 1 downward revision. That, ladies and gentlemen, is why the stock has been on a continuous rally since December 1st. Whenever a company comes out and they say, our guidance that we are projecting is now going to be X much higher. That's great. Now they're saying publicly that their earnings are going to be 10% higher than they were in their last guidance. And then they come out again and say our guidance for our next earnings is 10% higher. You mean that's 20% higher because of the past two? Well, that's going to cause a stock to appreciate. All right. Got a question here. We've got CRWD, Crowdstrike, and RBLX, Roblox. I like them a lot, quite frankly. Roblox, I think, is definitely a more of a growth play. So it's going to have some challenging times, but I think Roblox is a future in the metaverse, a very big future, especially opening up to hosting music events there and all kinds of things. All right, so I'll put in first CRWD. So we got Crowdstrike here. All right. All right, so Crowdstrike was continuation pattern, then in an uptrend channel, but it just has fallen out since this last earnings report here. Put a vertical there. It was in a downtrend before then, under that 200-day moving average, well below the 50-day moving average. Software companies really got hit. Technology growth, it's a bad area at the moment. One of the biggest reasons why is because of the rates being going up. But if I look over here, this would have been on, what's the date? December 20th. This was the last time there were any upgrade, downgrades, or coverage on CrowdStrike. And we have an outperform rating and a price target of $224. So that was the last one. So if we go from where we are today, 289, 288.61 in after hours, and we go up to 224. I went way too high. 224, which is the top of this area here. That's an 18% gain is what they're looking at. Now, right now, technically, on the chart, $200 is a resistance area, and you can give that a little wiggle room. $200 to $210. That's about where resistance is for CrowdStrike right now. And it seems to be trying to find support around $185. So I'm going to put a line here at 185. That's about where it's trying to find support. It's only dipped there 2 times in the past month, so it's really not much to go on. But if we go back here and look, what were other areas of support? 175 to 180. So I'm going to put a line here at 180. And then I'm going to put another line down here at 175. I'm going to take our 185. I'm going to change the color on that one. All right. So if we go back here to May of 21, March of 21, March of 21, and even December of 2020, this area between $175 and $188, $180, I mean, sorry, 175 to 180. That acted as support many different times on its way up. Now that it's on its way down, it's going to try to find similar support areas, because that's what traders do. Whenever you're trading a stock, you're always looking for areas that line up. And then every other person is looking for the same thing. And that's why you get such symmetry in trading. Now, they do say that the company's total addressable market is expanding due to post-COVID-19 planning, and the stock deserves a premium multiple to its peers. They also see operating leverage as Crowdstrike's revenue grows. So that's an interesting thought there for Crowdstrike. We have another one, but this goes back a little bit further. Upgraded to overweight. Now, and these were all in December. So we don't have a fresh go around of January yet. But the one thing's interesting is the majority of ratings are at a buy, but we're in a completely different environment. Also, mark your calendar for January the 10th. That is next Monday, because Crowdstrike is presenting at a virtual growth conference. Whenever management is at conference and they speak, you can always learn a nugget or two of new information about the company. So mark your calendar, January 10th, and then you'll be looking for anything that comes out while they are speaking. That's important to watch, something to watch, definitely. Earnings aren't until March, so we don't have to worry about that right now. Okay. The one thing about a company like Crowdstrike, technology, growth, software, it has those three different components. As we go through 2022, the rising interest rates are going to hurt growth companies, which you could count Crowdstrike as a growth company. Technology companies that don't produce anything physical that you can hold in your hand. Software companies. Because of our high inflation, rising interest rates, technology, software, growth are going to hurt in 2022. A lot of them may just lose some of their valuation and then trade sideways for a lot of at least the first half of the year. There may be a rally or two, but what I would do is I would pick your most favorite cybersecurity company. if Crowdstrike is your number one and you have a high conviction in it, then I would be looking for good entry points to grow a position, a long-term position. Because once we get through this environment and fear of rising rates, then the companies that got hurt the most, technology, growth, software, they're going to bounce back. So my strategy, and I like Crowdstrike. Crowdstrike would be on the top of my list. But it's a company that I would start looking for. All right, it's been a red day. How red is it? 4.6%, not red enough. Let's get redder. The two lines that I drew here, 175 to 180, in that range, that's where I would be looking to start grow. That would be an entry point. Now, I would want to watch something, though, on making an entry point into Crowdstrike at this moment in time, the 175 to 180. Will it go below 175? So if it's sitting here on 175, volume is high, and we just came off of a stretch of red days, will it bounce like it did in the past? Although that was a different macro environment when we were back in March of 21. It could go lower. So I guess what I'm trying to say here is that Crowdstrike, to me, is a solid company. The fundamentals on Crowdstrike, to me, are great. But our macro environment is bad for technology growth software, which means we're going to be looking for pain in the market for Crowdstrike. And I would just be looking for how low is it going, buy little pieces on the way down, because it will rebound and it will come back. This is a company that will be in very high demand as we continue our transition into digitalization, as more companies digitize. They need companies to protect their newly formed digital entity. And Crowdstrike is one of those companies that could fit the bill. So this is a company I like. I would buy on the way down. I wouldn't buy right at this moment because it's at a critical point where it could go lower. It's at a support area all the way down to 175. That's a support area for it. Could it go lower than 175? I would be buying down. Roblox, a good entry point, $92. Datadog and MARA also looking good at these levels. All right, let's look at those. Let's go to Roblox. That was your first one. RBLX. RBLX. I like Roblox long term. I think it can suffer short term, maybe even more so than Crowdstrike. Now, I did a video on Roblox not too long ago. So if you have some time, just head over to our YouTube channel and watch that video. I go into greater detail on Roblox. So the last bit of news here for Roblox would be on December 17th, a buy rating and a price target of $136. So that's good appreciation, $136. All right, you can see here on the chart, haven't been public very long. They did have this beautiful symmetrical triangle. They broke out of it. After this earnings, they rode, I believe it was 42 to 44% right after earnings. It was an incredible rally. That's about the time I talked about them. So in the videos, you probably want to go back to the beginning of November to catch that video on Roblox. But they are building this base of support right now at around $93 to $94. And they were down 3.7% today. So for me, they are getting very, very close to a nexus point where they're either breaking down or they're pushing up. Something is about to happen on the chart with Roblox. This is almost a descending triangle, which could create a reversal. But for me, the entry point is going to be down here at 85. I think 85 is a more realistic entry point for Roblox. And one of the big reasons I believe that is after earnings back here at the beginning of November, it gapped up. And a lot of times when you have these companies that gap up, and I'm just going to put a little circle around this gap up right here. When a stock gaps up like that, and then it's falling back down, it usually fills in the gap. So even though the stock is finding some support here at this level of 94 up to 95, it could be on the verge of breaking down. And with the macro environment that we are in, I would not be surprised of further deterioration. That's why I've got $85 as an entry point for Roblox. Your question about is $92 a good entry point? And I would say that if it breaks $92, it's going to $85. And right now, the 200-day moving average is just starting to kick in for Roblox here on the stock chart. And that's sitting at $85.96. That's where I see Roblox going. I don't think this descending triangle is going to create an upwards move out of this. I don't think the stock is going to whoop and break up out of this pattern. I think it's going to break down. And I think $85 would be a good entry point. Now, I'm going to leave these all right here so we can come back to this in the future and look and see which way it went. But I think with the macro environment, with rates rising, I mean, the 10-year treasury, it rose today, and a lot of technology and growth stocks seem to have a correlation with the 10-year treasury moving up or down. So $92 in the grand scheme of things, 5 years from now, a decade from now, $92 is going to look like an excellent entry point. But short term, I think $85 is the better, much better. And if it goes to 92, the question is, what's stopping it from going to 85? That would be my thought. All right. After hours, it's at 94.90 right now. Your second one, all right, you got Datadog. All right, this breakdown here too, man. Technology companies just really had a bad go at it. I mean, 2021 was an excellent year, at least until November, for Datadog. I mean, look at this channel that they were in, this ascending trading channel they were in. It was beautiful, and it was a nice rally that all began on earnings on the 6th of May of 21. And then we get to the end of November, and things just fell apart. And you can see how people were really wanting Datadog to get a break here, because it would have these big falls, and then it would have these not so big rallies, but big enough that it drops, what is this, 6% in a day, and then it gained, what is that? I can't see, the lines in the way. And 0.7%, and then another 0.5%. And then it dropped 7%, and then rose 3%. So people were really hoping that this bottom area of the trading channel would hold as support, but it's not anymore. And I think, like Crowdstrike, unfortunately, I think Datadog can go lower here too. So let's match this up. Let's find our support areas that we have for right now. I think the first one is right here at $154. That's got the most touch points. And then our resistance right now is going to be right here at 185. And I don't think we're going to see 185 for a while for Datadog. Now, the 200-day moving average is at 127. And if we get down to 127, that's right above a gap up. So if it's going to go down to its 200-day moving average, then it's going to be looking to fill in this hole that it made. But I don't know that's going to get that low, because there is another area of support right here at $135. So this is the range that I'm going to put on Datadog, down to $135. I think it's heading for that. I think it's going lower. I think a lot of these technology companies, I think all of them are heading lower. And it's just because of the macro environments. And it's got nothing against Datadog. I think Datadog is an excellent company. Let's see, this is in November. In November, there were a couple of downgrades for Datadog. And I mean, they're not stopping their business. They are steadily growing. Datadog announced AWS mitigation and modernization status as a partner. Yeah, they are not slowing down one bit. I think I talked about them a while ago too, Datadogs. Just looking for upgrades, downgrades here. Got to go way back on them. Datadog's also in the Google Cloud Marketplace. I mean, they are just spreading their wings and going. All right, so again, Datadog, it's one of my favorite data mining companies, and it's a technology company, and I know it's not the right. I know it's not what you want to hear, but I think Datadog could go down to 135. I mean, it's at 157, and I'm talking about 135. You must be thinking this guy is nuts. But I think these technology names, I think they are going to feel some pain here. A lot of them ran up in valuation. I mean, if you look at Datadog's run here, I mean, let's see here where it is. Let's go to the top. I mean, it ran up how much here? 192% from May to November, 192%. And right now it's back down to 130%. And you think the S&P 500, well, that went up by 27% of all of 2021. And we've got Datadog here since May of 2021 to today being up 130%. So these valuations, they are going to come back down some this year as rates continue to increase. So I think 135 for Datadog. I think you should mark it. And let me know if I'm wrong. Well, obviously, I'll be watching it too. But as a matter of fact, I'm going to, at 135, I'm going to set a stock alert. So if it breaks it, I get notified. All right. All right. We had another one on there, MARA, Marathon Digital Holdings. All right, let's get them on here. Okay. Just for transparency, I do not own Marathon Digital Holdings, but I do hold Hut 8 Mining. All right, let's see here. Not a lot of data to go on, but it looks like we have, we want to touch as many points as possible for a good foundation of support. And it looks like we may have $32, but it also goes a little lower than that to $30. So we've got a buffer zone here. $30 to $32 is an area of support right now. But one thing that I would watch is the rise and fall of Bitcoin. Now, if I take this, let's see. All right, so I just compared, I did Marathon Digital and I divided it by Bitcoin. And what we get here is showing us how the two are related in how they move. So you can see the run up here in the beginning of 2021 for Bitcoin. And then the early fall run of Bitcoin there. All right, that's interesting. Okay. Not yet. All right, and just shows a different source for the data here. And same thing. Okay. All right, just want to look at those correlations there. All right. Let's see here. Any upgrade downgrades here recently or anything in the news for okay, so Marathon Digital, Bitcoin production and miner installation updates for December. They produced approximately 3,197 self-mined Bitcoin during 2021, and that was up 841%. That's good. That's good. That's a good rise. All right. Let's see. So this is something that is causing some investors to fret a little bit about Marathon Digital. So they, with Bitmain, purchased 78,000 miners for $879.1 million. So the company announced it executed a contract with Bitmain to purchase an additional 78,000 next generation Antminer S19 XP miners, with 13,000 units being delivered in each of July 2022, August of 22, September of 22, October, November, and December of 22, with the total purchase price of $879.1 million. So, yeah, that's a hefty price to pay for 13,000 units and 78,000 miners. But that is going to take their 800 and what percent? Their 846% and raise it more through that acquisition, basically. Now, if the price of Bitcoin remains the same and doesn't appreciate, which it was at 46,000 when we started the live stream an hour and 27 minutes ago. So that's good. That should be good, solid growth for Marathon Digital. But the only caveat here is the price of Bitcoin and the correlation to Marathon Digital. Whenever Bitcoin, I know you know this, when you're looking into any mining company, that the correlation to the moves of Bitcoin directly affects a company like this. Even if they're mining Ethereum, Solana, Cardano, it doesn't really matter what they're mining, because investors are really only looking at Bitcoin. So that would be the only thing. With this addition of tens of thousands of miners being put under their wing, I mean, that's going to up their numbers dramatically. And if people forget that they acquired that for over almost $900 million, then people are going to say, whoa, how'd they mine so many Bitcoin? So that could be actually turn out to be a good thing if people have amnesia and forget about spending $900 million. I mean, how much Bitcoin do they need to mine to reach that 900? Let's just call it, it was 870 something. Let's just call it 900 million for even numbers. I think if you're looking for an entry point for Marathon Digital, with Bitcoin, how low it is now, and looking at the history of the stock and where it's founded support before, I mean, when it first came online here, yeah, it had to rally to get to $30. But then once it broke $30, it really only came back under this one time here. and it rode its 200-day moving average. You can see it bounced off that 200-day right here, again right here, and a third time right here. Now, here's the 200-day moving average right now, and it's quite obvious to see that it's underneath that 200-day moving average. So it's really showing signs of weakness right now. And of course, being under the 50-day moving average is extra weak, but being under that 200-day moving average, when it's used it for support before, that does make the stock a bit weak right now. And I know it's linked to Bitcoin, so if Bitcoin rallies, it's going to rally. But if Bitcoin continues on this, I mean, you can see, look at this pattern right here. Look at this pattern right here. We have, it looks like this. Straight line, and then straight line up, over, straight line down, and then another line. All right, remember that flow right there, okay? Now I will remember that, and this is just shows how Bitcoin and mining companies are linked together. BTC USD. What did I type in wrong? BTC USD. That same exact pattern is right here over the holidays. Right here. Goes out flat, goes straight up, straight across, straight down, and then flat. The exact same pattern, only spread out over additional days because crypto market never closes, where equities were closed over the weekend and extra for the holidays, but same exact pattern. So if Bitcoin can hold on to staying in this yellow box here, like it has for the past month, then there's hope that Marathon Digital can continue moving sideways as well. And if it's doing that, then $30 to $32 is a good entry point. But if Bitcoin has any more selling pressure on it, then that could push this below that $30. So I would hold firm in 30 to 32 as an entry point for Marathon Digital. And then obviously watch Bitcoin's movements carefully. All right. INMD breaking down as well. Support at 60. All right. INMD in mode. It's been a while since I've looked at these guys. Bouncing off that 200-day moving average, and I think that's what I talked about here when they were falling, because we've got that circle there at that 200-day moving average. We've got these two lines here. Red line meaning this was going to be my line in the sand of support between $58 and $62, and it's at 62.42 right now. So it got down close to that 200-day. It got to $60.89, and the 200-day is $60.43. So a quarter, 25%. I mean 25-cent difference there or so, give or take. I think that 200-day moving average is a good area of support right now. But I also think that that low here, $58, to the support 200-day moving average of $60. So $58 to $60, I think is looking a bit better as an entry point. But I'd go as high as $62. So if it dipped below that 62, then start to look at it. Since it's been red for a couple of days, down 5% today, yesterday down 6.8%. That's over 10% in 2 days. I would hold off. I'd want to see what the stock would do tomorrow before jumping in, even though this is right in an entry point area. One thing that you want to keep in mind is that if a stock is making moves down aggressively like it's doing, over 10% in 2 days, then this is the very next day, if it's red again and has a 3% plus negative day, then you're going to be down here at that $58 mark, and then maybe, just maybe, it can break below that. So that's why it's important to watch, not just jump right in whenever a stock gets into your zone to buy. So I do think this $58 to $60, I do think that's a buy zone up to $62. That is definitely a buy zone area, but don't buy as soon as the market opens tomorrow. Wait to see if this thing is going to come down even more. That's what I'd be watching, because whenever we are doing technical analysis, building an investment thesis, we always want to be fluid in our actions. Meaning, just because a stock alert is triggered, that doesn't mean buy now. The stock alert is there to get your attention, to say, oh yeah, remember this stock? So put a stock alert on this thing, rate it $60.50. That's a couple pennies above the 200-day moving average. It got 20 cents or so, 25 cents or so to it today. Almost touched it today. So may it touch it tomorrow. So stock alert for $60.50. That's what I would do. And then that gets triggered. Then I open up TradingView. If you don't have TradingView, link in the description for a free account. Then open up TradingView, look at the stock, go into it deeper. Go into it minute by minute, or have a 5-minute chart like this. I love looking at a 5-minute chart when I'm looking at this entry point here. Is it going to fall below the area we have marked off? So that's what I would be looking for. All right, let's go back to the 1-day view. Okay. All right, so there's just real quick entry point. It's in our spot, but I would set a stock alert for $60.50. See if it can break that. If it does, then watch the stock, see how it's moving. Is this going to be a downtrend that really brings pain into the market, where we can get good discounts on the stocks we want to buy? That's what I would be watching. All right. So 60 support, yeah. 60 to 60 because of the 200-day moving average. 58 here is the bottom. And again, what is this? 62 is the top. So that's the buy zone. So watch it. Set your stock alert. You can set stock alerts right in TradingView as well. All right. So as a matter of fact, I'm going to set a stock alert at 60.50 right there. All right. It's set. All right, Nvidia. NVDA. Nvidia, I am very bullish on Nvidia long term. Very bullish. Now, this is a bit of a prediction that I made in our last live stream on Nvidia. I said, watch Nvidia. I think it could come back down to the top of its trading channel and either fall just into it or maybe start a new channel where this old resistance line of the channel becomes the new support line. And we can maybe get even a new resistance area up here somewhere. But right now, if we look at Nvidia, we have this pattern right here. And I need to use it. All right, so I need to change the color on this. So bear with me for a moment just so we can see this better. So Nvidia is starting to form a symmetrical triangle here on the chart. Now I only have 2 touch points for the support area, but I've got 1, 2, 3, 4 touch points for the resistance area. So typically when we have a symmetrical triangle, when you get to the nexus point, which is where price is tightening, so somewhere within this circle right there, Nvidia should break out of that. And I do believe Nvidia will break up. So the stock is going to make a move out of this. And I'll leave this here too, so we can come back to it and look to see if Nvidia does. So as far as an entry point for Nvidia, I guess the probability is that Nvidia is going to reach this nexus point and it's going to break out. That's got the highest probability. There's a lower probability that Nvidia will reach this point and it's going to fall right back into the top of its trading channel like it did back here on December 20th, December 14th through December 20th, where it fell just back into the top of this trading channel and traded there for a couple days and then popped back out of it. So higher probability it breaks out, lower probability that it falls back into its trading channel like it did back here on December 20th. Now, as far as an entry point for Nvidia, I really want this thing under 280. Under 280. And I'm going to put a line here at 280.50. Because that's where I really want it under $280. And I'm also going to set a stock alert there. All right. Under 280, that's an entry point for me. Because if it goes down to 280, it's back in this trading channel. And if we look at what it did back here, when it dipped into the trading channel, it popped back out. And I think Nvidia is going to outperform the market for 2022. Let's see, what start are we off to? We're down almost 0.5% on the year so far, but we're just getting started. It's only day 2. All right, so Nvidia entry under 280. For me, that would be good enough. If you want a little more wiggle room, then you're going to have to, man, it's tough to say. See, Nvidia went on this really big rally, and it was really straight up at times. So if for some reason Nvidia breaks down and it crashes through the $280 mark, then this thing could come all the way back down to $228. That's the risk that you have to run here. When you're doing your risk reward analysis or equation, you have to factor in that the probability is high that Nvidia continues moving up, or in the very short term, continues consolidating, moving sideways. But if for some reason it gets hit and it falls, and I do not believe it will, because one of the main themes in 2022 is on manufacturers, people who make things. Nvidia makes something, because as rates rise, what investors are going to be looking for is companies who can make something today, who can sell something today, and who can make a profit today. Not sell something a decade from now and make a profit from it 2 decades from now. 2022, investors want their profits today. And Nvidia fits that bill. So I think there's still going to be a lot of buying Nvidia. But there's just 3 scenarios there. The highest probability is that Nvidia moves sideways, reaches a nexus point, takes a rally, get in under 280. To me, that's a good entry point. But if for some reason that it does decide to break down, I do think it could come all the way down to $228. So that's my thoughts on Nvidia there. I think it's going to be a real outperformer and winner on the year, because their products are in very high demand in a very high growth segment, and that's data centers. Ambarella is another company that is similar to Nvidia in a certain sense. They're a smaller company. They also do software on a chip like Nvidia does, but they're really into the EV market. So, for example, Rivian uses Ambarella's SoC, or software on a chip. It's also used for AI and computer vision, and that's Ambarella. That ticker symbol is AMBA, Ambarella, AMBA. And for them, I'd also like to get in at 180. Anything under 200, really. All right. Well, I'll wrap it up here unless you have any other questions. And of course, remember, that's exactly what I'm here for. Any questions you have, just remember, though, there are 3 things that I would love for you to do. Number 1 is to click the like button. It takes a second, and it lets YouTube know that this video is worth watching. Number 2, take the URL and share this video anywhere you can. Share it with friends and family. That lets other people know that you like this video. And that really helps. That really helps in our goal of helping others reach financial freedom. Our goal, to help others reach financial freedom. And the second thing that I would love for you to do is to click the first link in the description and become a Patreon member today. Last night, we sent out, and I talked about it at the beginning of the show, we sent out our top 10 growth stocks list. We sent out our top 10 dividend stocks list, which we like to call yield leaders. And there's a very specific reason why, because we're not just looking for the top dividend paying stock. We actually have an equation that comes up with this and our top 10 momentum plays. Now, the growth stock list and the dividend stock list are updated every single month, sometimes multiple times a month. And the momentum plays top 10 is updated every single week. Now, just to give you a really quick insight into how we come up with our top 10, our one other thing I should add. When we released our top 10s, we also included bonus stocks for each of the three lists. So there's 30 plus top name stocks that you can choose from to kick off the new year, so we can all reach our goal of financial freedom. Now, here's an example, just real quick, hear me out, on how we got our top 10 momentum stocks. And again, this is updated every single week. Our momentum stocks, or momentum plays, as we like to call it, is our proprietary list of 10 of the 10 most liquid, high relative strength stocks in the market that are ideal for day and swing trading. High quality names. That's why it's updated weekly. It is generated from a proprietary algorithm that places heavy emphasis on superior relative strength, high average true range ATR values, and high average daily volume, among a few other data points, of course. An updated list is published each and every week for Patreon members. So I implore you to click the first link in the description, check out our different tiers, and become a Patreon member today. It is a great way to help out our research, analysis, and technical breakdowns. We've done the research on these stocks, so you don't have to. Again, it's this first link in the description to become a Patreon member. That is greatly appreciated because it helps us and we want to help you. All right, so I'll wrap it up today. That's what I wanted to talk about. And thank you so very much for your questions. That's the most favorite part of this video, being able to answer your questions. So thank you for that. And I'll wrap it up here. I'll be back tomorrow around 5 p.m. Eastern to talk about what happened in the market and to, of course, answer your questions. So thank you guys so very much for being here, and I'll see you in the next video.